Tony here. Welcome to the KIS Investing Weekend Review. After my surgery on Tuesday, I'm back, and thank you very much to everyone who asked about my health. Thank you. Now, this week, I was expecting a sell-off on Tuesday and Wednesday. Tuesday, I even left some positions before my surgery to see if we would go down, but we didn't. And the sell-off came on Thursday after a ridiculous up move. And we're gonna see the week was down, but it wasn't down very much. I think there's a lot of downside remaining in the market, but it's going to get a lot more interesting from now on. Very well, so let's get to it. You know, I'd like to start every week by looking what happened with the main indices for the week. Take a look at this. If you would have thought how big the market crash was this week, you would have thought it would have been much, much bigger. The Nasdaq went down 2.8%, which is absolutely nothing. The Russell 275, the S&P 2, and the strongest indices this week was the Dow Industrials. It's amazing. Even Monday, Tuesday, and Wednesday, we had up moves in the market, and we only got a very strong sell-off on Thursday. Friday, they scared the children a little bit, and then we rallied back into the close so everybody could have a very happy Labor Day weekend. Now, let's take a look at the year. If you see the chart here, you can see the first little tip down on all four major indices. The Russell retreated from over a 40% return this year to down to 33.5%. The S&P is up 6% for the year, and the Dow and the Russell are still down. The Russell is down 7% for the year. Wow, the small caps are taking it in the chin. Now let's take a look at the FAANGs. Tesla. You know, I've been talking about Tesla for many weeks, and I've been wrong. I thought it would go down way before it did, but the stock went all the way to $500, which is the pre-split price of $2,500. And then we heard that a big owner or a big investor in Tesla started selling. Also, Elon Musk, which is a very smart guy, sold shares to investors at around $498, and he sold $5 billion worth of stock. I think those two things, the share offering and the big investor getting out, were triggers to start a little sell-off on Tesla. Tesla is down about 20% from its highs, and it went down almost 25%. Tesla could still go down 50% or more and still be super duper expensive. Elon Musk, I don't know what he's smoking, but wow. All these moves they're not gonna end well. Also, take a look at this and maybe take a screenshot, because I don't think we're gonna have many chances to have all the FAANG stocks color red in the same week. And this is a rare occasion, but look at the down moves. 1%, 2, 3, 4, 5, 6%. These are absolutely peanut compared to the moves of 50, 60, and 400% for the year for Tesla. So yeah, the market took a breather, a very small breather, and everybody's panicking. I just can't imagine, if we really have a down move, what's going to happen and how people are going to react. Now let's take a look at the sectors within the S&P. Also, a very rare picture that I have here for you today. The XLK was down 3% for the year, and it's actually down 4% for the month. As you can see, the XLK is up 28% for the year. It has been the strongest and most powerful sector within the S&P. Of course, because the FAANG stocks live within the XLK. And then the second weakest of the week was the energy sector, which has been the ugly stepchild of the S&P. XLE down 2.6%, down 41% for the year. And if the US dollar starts to gain a little bit of strength, all commodities might come down a little bit, and it could put extra pressure on the oil sector. And just keep an eye on this, just in case the dollar keeps strengthening. Now, our beautiful friends at Goldman Sachs just gave us a mid-2021 year target for the S&P of 3,800. Yes, 3,800. These are the same guys that March 22nd gave us a target of 1850 for the S&P. Now, of course, Goldman Sachs is a very reputable firm with great analysts, but they're often wrong, very wrong. They have been wrong on oil, they have been wrong on gold, and now they have raised their price targets on the S&P to 3,800 in just 10 more months. Hey, anything is possible, but I think this move is getting way, way, way overdue. Now let's take a look at our anti-bubble positions, at the positions we all should have in our portfolio in order to protect ourselves. Once again, bonds, it's amazing. Bonds still had a great week, up almost 1%. TLT is up 20% for the year. And gold managed to eke out a small 0.22% up week and is up 27% for the year. If you really want to protect your portfolio against the devaluation of the US dollar and the relentless printing of money from the Fed and from the government, take a look at these tickers: soybeans, TLT, XLU, GDX, GLD, TIP, corn and wood. These are the types of stocks you have to have inside your portfolio in order to prevent your money from disappearing and losing a lot of buying power. These are gonna keep working, and like I said on the slide before, if the US dollar keeps going up a little bit more, that would give us a good entry point to start adding more to our positions of commodities, gold and bonds. So take a look at the dollar and take a look at commodities and look for entries in the next week. Now let's take a look at this very interesting S&P pattern. This is a huge uptrend that has been alive for many, many years. And take a look how great in February this trend line acted as resistance. And once again, here in the beginning of September, this trend line acted as resistance once again. Maybe it could hold. If it does, I would be looking for the S&P to go down to around this area between 2,900 and 3,000. And I think this is a good area if you want to add more of your long. Now let's take a look at the huge up move that the S&P has had. And take a look at this candle, that hammer candle that we can see that was created on Friday. That was a big rejection of the lows. And normally that signals a reversal. That means we could start going up for the next week. But I'm really hoping that we go down to the 150-day moving average, which is 31.45. That would be a great place to sell some puts or start adding to our longs. Next week, I think it's going to be a crazy week. I predict a neutral week. I'm hoping for a down week, and I would be very disappointed if we once again get a huge V-shaped up move recovery in the indices like we have always had for the last 12 years, ever since the Fed started to print money and to rescue the 1% of the richest people in the world without any consideration to the middle and lower class people on planet Earth. Well, that's my review. It's dangerous out there. Be careful and good luck trading, guys. Thank you very much for watching this video. If you liked what you see, please help me out a little bit and click like. If you can, also click subscribe and leave me a comment. Let me know what you think the market's going to do next week. I'm curious to see what other investments and traders are thinking this week. Very well. So good luck trading, and remember, you gotta risk it to get the biscuit.